futures making your first trade. Now, Errol has already made his first trade, but you've done kind of what a lot of people have done in the past, which is you probably like clicked buy or sell on a futures market. And you were just like, I got this thing going, but I don't really know what's going. Like, what was your experience with that first trade?
It was just one of those things where Tom was taking us. He just wanted us to be some of the youngest people to be trading every single product, whether it was a digital asset, a future, whatever it was. So we had put on one trade. I can't even recall exactly what it was. I just remember taking it back off, and I never really got back into the futures. But that was the first trade. And I don't believe it was a small product either. And I think I maybe had it on for a day, if that.
Well, so, okay. A day, that already is a big tell for kind of like people who are new to futures or people watching the show trying to make their first futures trade. Maybe give a little background just in your mind of like, it was only a day trade. What are futures? How do they stack up next to your stocks, next to your options and everything else? Like in your mind, what is your current view of futures?
Right now, futures it's something to where, again, with the guardrails, I feel kind of, I guess, lost. With options, I'm fairly comfortable. I understand intrinsic value. I understand extrinsic value. I understand when my options are going in the money, out of the money, when I should roll them, all that kind of stuff. But in terms of, I guess, managing the futures position is, I guess, a reason why I just hopped out real quick. And I was like, oh, cool. I bought and sold the future. Yay. I get to say I've traded a future. So in terms of just being involved in futures with my options and stocks, whatever it is, just very down here. So I'm not sure if that answered the question.
We're going to get you all that stuff, like mechanics and everything. We're going to get it all cooking. It's going to be fantastic. But I just wanted to get your idea of it, because I've been so deep for, 6 years now on all this stuff. And so it's great to have just like a fresh mind, and what a lot of people at home are probably thinking, where it's like, I bought this thing and it felt kind of uncomfortable, so I sold it pretty quickly. And that was it. And that being said, that is like, and this is what Tom Sosnoff has made a living off of, is like, that is the best education out there. And that's the way that he teaches it. That's the way that I think the best teachers out there teach it, is just like, you want to know about options? Like, yeah, read up on it, figure out, what a call and a put is, but then go in there, sell a put, and then buy it back and feel what it feels like for a couple of minutes or a couple of hours. And then like, that is a great education in and of itself on trading anything. Now that's what we're doing here today, right? Getting in there and doing the thing is so much better than spending months and years reading books and trying to learn on the thing, right?
Right. And to add real quick, something I've kind of seen for futures too is something, if I want to get very directional, I guess. I've never had kind of a neutral assumption on whatever it was, but I always saw as futures something very directional, either longing it or shorting it.
Absolutely right. And gosh, this is great. It's like you're reading my mind almost, because this is the course of, for me, making your first trade in futures. Like, first of all, you don't want to be uncomfortable, and you don't want to make this first experience be one where it's like, oh, I might lose my whole account. Like that's the worst type of thing. It's like, oh, I've never been on a roller coaster before. It's like, I'm going to take you on Raging Bull and you're going to puke. It's like that's not what we want here. We're going to make this as small and simple as possible. Your first trade should be the least stressful it possibly can. And that's why we got 3 steps for you, which is finding a small market, and I'm not even trying to say like a small exchange market. I'm just like, find something that's small, something that moves, hopefully just like less than $100 a day or $100 a day. So if I do buy or sell it and I got the position on, it's not getting away from me, because you put on a position in those NASDAQ futures, Errol, and that stuff's going to be moving a couple $100 every microsecond. Like you can't, that's going to be an uncomfortable ride. You buy or you sell it. Like you say, futures are directional. Like it's a derivative like options, but when you buy the future, you want the market to go up. When you sell it, you want it to go down. It's a lot simpler than options in that way. And then finally, just close for a small P&L, and also keep that L on there as well, because there's no problem, especially with your first trade, futures, you got to be comfortable with taking a loss because the stuff could get away from you. You're like, I don't know if you watch natural gas or crude oil or anything like that, but the stuff can go from $70 in crude oil to 75 to 80 in the matter of a week. And if you're trading a product that has a multiplier of $1,000, like the old crude oil, that's $10,000, man. Like, you can't let that get away.
Yeah. And I think, crude oil been going on a tear lately? Just to your point.
Absolute tear. Natural gas as well, man. They hit 10-year highs in natural gas a couple of days ago. And that's a market that went from $4 up to above $6, which, like, $4 to $6, that doesn't seem like a lot. That's, I think, $20,000 if you're trading the natural gas futures. And so let's dig into it a little bit. I think I got a small market here for you. And I think you're going to be really interested in this because I know all the kids love interest rates, baby. It's a small 2-year yield. What do you know about interest rates? Anything? I mean, you don't have to know anything about interest rates, but what's your deal?
With interest rates, it doesn't go too extensive. Let's say I think they're going to raise interest rates. Do I want to get long the 2-year and ride it to 10? I don't know.
That's all I needed. That already I think is a really good beginning spot, which is just like, I think a lot of people, interest rates still in my mind in like a practical sense is like, oh man, I don't know. Like, it has to do with like credit cards and like car loans and like all this stuff. And it does, but for trading's sake, I mean, we're looking at the 2-year here. When you're looking at like short-term rates, which is 2 years out in the future, we also have 10 years and 30 years. When you're looking at just 2 years in the future, it is as simple as like, if the Fed raises their short-term rate thing, then the 2-year treasury yield, it should also go up. So like, if I'm thinking hikes from the Fed, then I'm buying. If I'm thinking that they're going to cut, or they're going to go back down, they're already at zero, so they're going to stay at zero, then I'm selling. It's really, I mean, for all intents and purposes of trading, that's a great first pillar in interest rates. But we don't even need to go deep on interest rates. I only bring up this future because it is the smallest futures in the world. I can confidently say that because it is a future. And this is going to, people who've heard of futures in the past, this might kind of catch you off guard. It's $300 notionally. Like you, until recently, until like the last 2 years when micros have come into play and small exchange futures have come into play, Errol, every futures contract for the most part is at least $50,000. Most of them $100,000. NASDAQ futures, the E-minis, those are $250,000 products at this point. This thing's $300. If you buy threes, you're long at $300. If you sell threes, you're short at $300. That's it.
So before a lot of these small exchanges came to be, it was pretty much individuals trading futures with deep pockets, I guess you could say. Not everyone had as much access or the ability to get into some of these things.
Well, the problem was, Errol, that like the futures were mostly constructed for like big banks or like big agricultural companies. And they would come in and they'd say like, all right, like we've got millions on our books worth of like long exposure in foreign exchange, or if we're growing corn, long exposure in corn. I want to hedge that up. And so the contracts were big, but they found that the cost efficiency that we'll get to here in a second of the futures started to drive a lot of retail users in the market as well. Individuals who in the 90s and early aughts were like, hey, this trading game, I can actually access it and do it myself. And they're like, whoa, these futures, I only have to put up a couple of bucks to trade a lot of bucks worth of exposure. But yeah, you hit something exactly right where, and futures still to this day kind of have a stink on them, which is like, people were in there trading institutionally sized markets. And so you'd get in there and you'd buy the S&P 500. And if it would move down 1 or 2%, you'd be out like 10 grand. And if you didn't have deep pockets, you're in trouble. So this has been a recent trend, which is honestly like largely started by the small exchange. We've thankfully been driving the CME and other exchanges to do this, which is like, let's make small futures for people who want to only put up, 5%, 10% to buy and sell a market, but just make that market $300.
And you still get to participate in those moves.
Exactly. Like it's the same, like this 2-year yield is the same as the ZT futures, Errol, are the 2-year note futures, which are like, they're the popular like futures for, they're like your father's futures for interest rates. Okay. And that futures contract is over $200,000 in size. Like that gives you a little idea of the comparison, where it's like, if Errol wanted to come in and trade interest rates and he didn't have the small 2-year that we're looking at here today, that product is $200,000. It seems crazy, right?
Right.
It's absolutely nuts. And
that's
also,
unreal.
The cost to trade this thing, and this is a little of the efficiency side, which called leverage a lot of times, which is like, it's $300 and I don't even have to put up 50% or 100% to buy or sell it. You're actually trading this market today for $72 in margin. And that goes a long way to your point earlier of like, I only had it for like a day. Well, how can I get decent returns on trading something for just a day? This is where it comes in here with that leverage, putting up $70 to trade something that's $300. Kind of nice.
Yeah, that is nice. And then again, I mean, just the emotions that will go into it when you're trading such a large market. How can I trade something that keeps me not jumping out of this trade anyways? So.
Dude, unbelievable. Like seriously, this used to be a feeling that many people felt, which was like, I can't sleep because I have
watching the futures market at night, just right beside you.
You can't. Absolutely. And guess what? The people who I did trade with at the board of trade, who were trading futures and everything, the people who did go to sleep with positions on, they got a call from our risk manager because they'd be up or down like 20 grand and it'd be like, dude, what's going on? It's like, I fell asleep. So if you do fall asleep, you get in trouble. It's unbelievable, dude. But what's really nice also, back of the envelope math, you can use this for almost every futures market, is that the margin you put up, the market tends to move, and this is just because of the risk modeling there, the market moves about 20% of what you put up. So in this example, we're putting up a little less than $100. On a daily basis, that market's going to move about $20, which
so when plus or minus.
Well, yeah, plus or minus a couple percentage points. But what makes this really nice, Errol, and I remember when I connected with you a couple of weeks ago when you were in town telling you this, where it's like, what's really nice about this is you can trade a small product and you can put up less money to trade it. And it can move on a daily basis around 20%. Those are nice day trading returns. That makes it work. This market is up well over 100%. And if you bought this market when it was back down at $1.25, where it started the year, and you posted $70 to do it, you've made well over 100% returns in just a few months. And you can make this. You could make, 10, 20% returns. Of course, it can go against you on a daily basis. That's where futures really come in.
I gotcha.
No, it's really, I think, an interesting thing to think about, especially when you combine it with small markets. This idea of like, leverage is scary when it is a $200,000 product, but when it's a $300 product, it's a really nice thing to have a look at. And I will quickly bring up this platform because we're looking at today, Errol, a 14-cent move, which is $14. And this is, like I say, a market that if you bought it at the open today, you put $70 up to do so. If you made $14, it's like, oh man, $14, that's nothing. That's over a 10% return here today, right, which is really nice, man, right?
In a day.
Unbelievable. You extrapolate. Of course, that's not how it's always going to be. You're going to have, like I say, you're going to have losses and you're going to have gains, but that's why futures are such a kind of day trading trade. Yeah. And so this is where I wanted to go for your first futures trade. You go into S2Y in the Tastyworks platform, you check it out. It's at 313. That's $313 worth of exposure, costing you $72 in buying power. The fees are extremely low, the lowest of any futures exchange, and this platform, the commissions are extremely low. You just go in there, Errol, you buy one here at 313, and you just see how it feels. Like it's not going anywhere. It's not getting away from you. You can see in the last several days, it's only moved about 50, 60 cents. That's $50 or $60. And then you see how it feels And if you want to sell out of it today, that's totally fine. If you want to hang on to it, you think that rates are going higher, then you hang on to it. And just this is how you learn how to trade futures, man.
Yeah. So I don't want to jump the gun on anything you're about to bring up, but let's say we get into a trade like this, with options, we're managing our positions this way, this way, this way. If we're going to trade a futures, are we going to do something like, okay, I want to risk, I'm comfortable sitting in this $20 if it goes against me, and I want to take profit at around, maybe $40. I have that 1 to 2 risk reward. Is that how something you would approach this, or?
You're exactly right. And so my thing, and this is just my shtick. You're here to develop your whole vibe on futures markets. My whole thing is like, if I'm just 55-45 in terms of being right and being wrong, then I'm just going to take symmetrical gains and losses in the market and then call it a day. And so with something like this, and I like how you use that $20, $40 mark, because that makes a ton of sense, right? Like you just did the math in your head where it's like, all right, Frank told me that it moves about, $20 per day. And so that's something I could expect in a day trade of futures, or, this is one you could have for a couple of days and it's not going to keep you up at night. And so my thing would be, I bought the 313s. I'm going to manage this at 333 for a profit, or I'm going to manage it for a loss down at 293, $20 against me. But it's totally fine if you are, creating probabilities of success that are, 60% or 70% or anything like that, and you're taking bigger losses than your wins, then that's totally fine. If your probability of success is 30%, 40%, but you're taking bigger wins than your losses, that's totally fine. Just make sure that you engineer a scenario, Errol, where you're not on average at the end of the year, say you trade futures 100 times in a given year, where the probabilities play out and you've engineered a loss. Like you don't want to be taking bigger losses than gains and you're only right 40% of the time. That ain't going to work out.
Right. No, that makes a lot of sense, because now I see, okay, this is how we can buy and sell a future. I see how it works. Get in, it's not scary. Get out, lose $1, make $1, whatever it is. But how can we kind of construct our own strategies around this? You know what I mean? Is it with news and the Fed releasing whatever it is? Maybe I want to get long. Maybe I sell the news. I don't know, whatever it is. But I don't know if that just comes with experience or...
Oh, yeah, you are getting ahead of us today, but it's all great, because that's the next steps, man. Is like, I'm glad you're so obviously quick here at learning stuff that it's like, all right, great, I'm comfortable. I'll burn $1, I'll burn $2, and right here, I'll just
the way you just explained it. Yeah, I mean, it makes me automatically feel comfortable, honestly.
Like look at that. Like I bought the 313s, and say I just want to get rid of it and be like, I did my first futures trade. This is a great learning experience. I just sold the 312s. I lost $1 and I paid 50 cents in fees. And for $1.50, Errol, I learned how to trade futures. That's great. But yeah, in the future, we are going to look at, an event or, a strategy that has some probabilities behind it that are in our favor. We've got hopefully an edge of 10% or something like that. And we're going to wrap mechanics around it. Just wanted to get this on the board. A first futures trade, man. I hope it made sense. It sounds like you're in on all this.
Yeah, man. I mean, what it kind of reminds me of right now, just getting in and out, it reminds me of just trading stock in a sense, just kind of with a little more bang for my buck, I guess you could say.
Yeah, there you go. We're going to cut that, John. We're going to cut that piece because that's perfect. Futures, just like trading stocks, but with a little bang for your buck. I love it, Errol, man. This has been fantastic. Hopefully you're having fun. I'm going to try not to talk as much next time, because everybody on the network knows I talk way too much. Next time we're going to let you talk about J. Cole and everything else. Okay. Is that okay?
I don't know if you'll want that, Frank, but nonetheless, I just want to soak up the info. You're the guy that's been in futures. You introduce a lot of these products. I'm new to the scene, so I'm trying to learn with you. So
soon you're going to be a heavy on the scene. Okay. You're going to be the Jerry Garcia of the San Francisco 60s, 70s jam band scene. Oh, wait, he doesn't get that reference, everybody. Anyways, Errol, it's always great to hang out with you, man. I'm looking forward to having you on every Thursday here. It's going to be a blast, and we're going to get some futures trades going, man. It's going to be a fantastic time. Thanks as always. And thanks everybody for watching. That'll do it for Small Stakes. Splash into Futures coming up next. Pete Momat and I are going to dive into the platform and get some trades on everybody. A big bounce in stocks here today, and crypto falling off a little bit. US dollar moving lower. Oh man, we got a lot of stuff to do. So hang out for that. Errol, thanks again. And thanks everybody for watching.